I'm Zambrano, Chief Market Analyst with Trade Captain and Amana Capital. Based out of London, I'm going to provide you guys with a quick update on the Euro, Bitcoin, DAX 30, crude oil, and gold. But before we start though, as always, I need to stress that trading financial markets is unfortunately risky, and there's a genuine risk that we lose all of our invested money. So please bear that in mind before you start trading. If you're new to this, if you're looking this on YouTube, then feel free to visit tradecaptain.com and the live trading room for more updates like this and more educational stuff and webinars and so on and so on. Okay, let's begin, and we're going to begin with the euro versus the USD. So this is the euro dollar, and the market is moving lower today. In fact, we're seeing a bit of a coordinated move where the dollar is gaining against euro, the pound, Canadian dollar, and against the yen, and so on and so on. So what we're seeing here is some sort of dollar buying really, and the market here, after we took out these lows here, so this is the beginning, the first price really of 2018. The market traded below this, and now you're seeing some selling because of that, because the very short-term bullish trend is now, at least in the short term, bearish, and it's pushing to the downside. But I do suspect that between 119.52 and 118.13 that the market is going to try to bottom out. I think in fact the hot zone, or where I do anticipate some sort of a low, is really between 19.52 and pretty much 119. Here, as we start to approach this resistance levels, that's where I think the market's going to bounce. And then, because the overall trend is bullish, as you can see here, the market is creating higher lows. I suspect that somewhere here we'll try to create a new higher low in relation to this, and then we'll bottom out and then try to head to the upside. The alternative is that we just push up here. So the question is, when is it time to actually sell the euro? Well, I guess if we trade below 18.13, this market can go down and then probably up, and then we'll see if it wants to go to the downside. But there are better ways if you are bullish a dollar. Guys that know me and so on, you know that I've been looking at the dollar yen. In fact, yesterday we reached profit targets for the dollar yen, and then overnight the dollar yen declined. And look for that range that's making up the dollar yen over the last few days and weeks, and in essence, buying maybe around those lows makes sense. So I think that's a better option if you happen to be bullish on the dollar. If we look at Bitcoin, Bitcoin and the cryptos in general had a very wild ride. Ripple, I think on some Korean exchanges, was down with about 39% at one point. Since hitting this high here, the price of Bitcoin is down with about 19%. Overall though, the structure here remains neutral to bullish. It's bullish if you look at it from a big picture perspective, because you have a low down here, and then you have another low here, and more importantly, this low here. So above this level, this market is bullish. And as I said when we were trading down here, I said traders are probably going to look to buy here, which they did, and then the market moved up, and now it's just correcting against that. But I think it's more to this than this, because there are some altcoins, which are other coins that are not Bitcoin, that have gained. Ripple again being one of those. And then there's a bunch of these smaller coins, like some of the coins that were big before, not even big any longer, or at least not in the top 10, like Dash and Monero are not in the top 10 any longer, and instead you have other things like Tron. So there's money shifting from these bigger, more established coins to smaller coins, which is fair. In fact, I think as the dust settles, maybe 5 to 6 years from now, right now there's like 1,800 coins or so on the exchanges, at least on coin market cap, but of those, 1,800, I will be very surprised if at least half of them survive, just because there's no need for this many coins, unless they are like the share of a company. So it's like a share. So you investing in a company, but if it tries to be a coin like Bitcoin, then it's unlikely that we're gonna need all of these coins. In fact, if we 5-6 years from now still work with maybe 5 to 6 coins, then that I think would be reasonable, whereas everything else would be not used any longer and have very low values. So we need to be careful, but for now I think as long as we're above 11,919, then there is a bonanza. Things are happening here. And what I find interesting is that a lot of these exchanges that offer the ability to trade these have actually had to close their doors. Bitfinex, which is one of the bigger ones, had to close its doors because they were under hacker attacks, and they limit the amount of signups. And at least right now on their homepage, they will gonna open for new clients on the 15th of January. So maybe around that time, we'll start to see maybe pings up. So as more and more people open new accounts, and what is also interesting, of course, is that you have other players like Kraken and so on that had closed over the New Year's, couldn't actually deposit or withdraw money, and they are opening up now. So I do think we're going to have potentially fresh money in the next week, and new clients, or not new clients, but new people trading, and that could potentially lift things to the upside. For now, though, watch 11,919. As long as you're above this level, then there's no reason to actually change the bias here. Here's US oil, and US oil did try to spike to the upside. I would watch this high up here, which is 62.52. If we trade above this level, I think we can trade to the upside. If I take a look here at the pivot points and load the monthly pivot points, they're gonna give us a target to work with, and I will look for 63.40, so 63.50. That's the daily monthly R2. So maybe if we take out this high, market might go a little bit higher. I suspect traders is going to watch 61.04 as some sort of support. The alternative is that this moves to the downside, and around 60.38 or so, traders might potentially look to buy again. I'm overall bullish as long as trade above 59, which is this level up here, down here, the high here. Here's the price of gold. Now gold is holding up fairly well in comparison to say the euro dollar and the pound dollar. Here, if we take out this high, which is 1,326, this market could potentially go up. If not, I think we'll probably try to drift a little bit lower, maybe hit 1296, 1280, and then we'll see what happens. I'm personally finding it really hard to work with this market right now, given that it's consolidating, and I do want to see some sort of a breakout. But we've been stuck here. This is just 2017, and this market has actually been stuck here in a range since 2013. So when we have a break, it's going to be an amazing break. But for now, if this converges for another 6 months, then that wouldn't surprise me. I mean, we can just extend these lines, and obviously somewhere here in 2019, that's where they meet, but usually we have a break before that. Yeah, so maybe August this year or something like that, we'll have some sort of a breakout. Here's the DAX. The DAX took out this high here, and this is a daily chart you're looking at. Took out this high, which is the December 19th high. It's not bullish again. If you watch the S&P 500, it's really very nicely trending to the upside. That's something I would watch if you're looking for nice trends. And I think this is it's catching up really to the S&P. So it's probably gonna try to target this high, but it's not the time to buy here. The only people that are buying here are people that got stopped out because they were bearish. I think this could go up potentially, and then maybe when it comes down, and I guess it will come down at one point, I think at that point look to go long. The issue right now is that the low is way down here, and it's difficult to actually trade and buy with a stop loss down here, because our risk is going to be this, at least the initial risk, and that's 5%. So then it would only make sense if we think the market's going to rally with another 5% to get at least a positive risk to reward ratio. Okay, guys. So that concludes today's market overview. Don't forget to join me here Monday to Friday at 9 a.m. London time. As well, if you are trading, then don't forget to check out Amana Capital's demo, and maybe even trading with these guys. The reason for that is that they are the guys actually supporting this whole website, which is tradecaptain.com. So if you do like the content we produce here, then don't forget to help out by trading with Amana Capital. As well, don't forget we have other things here as well. We have a new ebook that you can download. It's free to do so. You just need to have a demo. And we have a new webinar coming up, retail sales and consumer price index in 3 days. And we have some interesting webinars coming up as well. How to trade with chart patterns. So a bit of classic stuff, which is good, and also very good intro if you're new to the market. And then we're gonna do another webinar called the top trades of 2018. Now we haven't created pages for this, but they're gonna be here in the webinar section in the next week. Okay, if you have any questions, reach out to me. My name is Alex Alejandro Zambrano. You can reach out to me via AlexFX00, and that's my Twitter handle. Have a good day. Thank you.